Hello everyone, welcome to Gold Week Analysis. First of all, let me tell you that I have a free Telegram channel where you get market updates, chart analysis along with trading setups. So if you're new to the channel, definitely check that out. The link is given in the description below. Also, if you want paid signals at a very minimal fees, for that you can contact me in my Telegram handle, which is ARoyB. My link is also given in the description below. Now let's start with the analysis. So first of all, let me tell you, it was a beautiful week. Gold moved exactly as predicted in my last weekly analysis video. So it was a bearish week, as I told you. Therefore, is the reason. So this is a weekly candle or weekly chart of gold, as you can see. So the reason of bearish call were these two candles. That market definitely were going to the 1980s, 1985s, but they couldn't sustain there. And again, they're coming back and they gave this kind of closing here with big wicks in the upside direction. So these gave us indication that this week is going to be a bearish week, and that is what we got here. You can see here we got a red candle here, right? Okay, so now let's look at the events which took place this week and what kind of effect they had on gold on daily basis, right? So let's look at them. So for that, let's go to the daily chart. Okay, and now let's go to the Forex Factory calendar here. So this was the all the events of the last week. So starting Monday, we didn't have any big news in USD, right? We only had Chicago PMI and loan officer survey, which are not high impact news. So what happened was that gold took the news from the previous Friday of the PCE data, which was soft, and that is why the dollar index, it came down and gold gave us a very good upside movement on the opening of Monday. Okay, so you can see that this was the Monday. The gold opened at 1959. It went up high till 1972, but again came down and gave us closing at 1965. So overall, it was a bullish day, right? Okay. On Tuesday, what happened? Let's look at that. So on Tuesday, we can see that USD we had the PMI data along with this job openings numbers, which was as expected. It was 9.61. It came at 9.58, pretty much close. And PMI was a little bit negative, 46.9 expected, but came 46.4. Also, there was ISM manufacturing prices. It was expected 43.8, so a little bit weak, 42.6. So the data were not highly negative, just a little bit, downside. So this how did it affect gold? You can see here what happened was it got a big red candle. So what was the reason of that? The reason was actually not because of the data. The reason was actually because of an financial institute, which is Fitch, and they have downgraded the US credit ratings actually. So that was the reason that the US Treasury, the bond yield or US 10-year yield, it rose up. As you can see here, if we go to the US 10-year chart, and if I show you the daily candles, so in daily you can see that on Tuesday, this was the Tuesday candle. So on Tuesday we got a good green upside movement here, right? It was because of the decision of Fitch downgrading the US credit system. So that was the reason the treasury bonds went up and gold felt the pressure, and it gave us this big red candle here. Okay. Next, on Wednesday, what did we have? Let's look at that. On Wednesday, we have the ATP data, which was highly positive. Expected was 191k, but the actual was 324k, which is highly positive data, and that is why obviously dollar index, it rose and gold felt the pressure. And as you can see, we got this red candle here, right? At first, gold definitely went up in the Asian session, but in the later European and after the news in New York session, gold came down and gave a red closing. On Thursday, we didn't have much data, and gold was sideways near 1935, which is a pretty good support here. And on Friday, what did we have? We had three datas. On Friday, as we can see here. So average hourly earnings, it was 0.4%, which was the same as the last month. So we didn't have that kind of strength. We didn't put that kind of strength in dollar index. Also, unemployment rate was a little bit low, and on the positive side, just 0.1%. It was 3.6, and it came out to be 3.5. So a little bit on the positive side, but not that kind of news that would just move dollar index in a very big way. And the most important data of the week was non-farm employment change, which was the NFP. So in NFP, what did we have? We had 187k, which was the actual news, but the forecast was 205k, more than 2 lakhs, but it didn't happen. since last 2 months since last 2 months, NFP has been coming below 200k, which is a highly bearish news. Okay, so previous month also the same numbers, it came 185k, and which was lesser than 200k, and this month again it was 187k. It's pretty much closer to the last month, and this month again it was lower than 200k. So this was a bearish indication, and market definitely took hit of this news. The dollar index, it went down, and gold, it went up and crossed the 1940s and gave a good closing at 1942.6. So these were the datas throughout the week and how gold reacted. Now if we look at the technical side, then what can we see and what are the fundamentals of the datas that are coming in the next week? So first let's look at the datas. So if we look at the datas, then let's look at this week. So what we can see is that on Monday, what we have a speech from a FOMC member, Harker. That will be important. On Tuesday, we have a very important news actually, which is the CNY trade balance. CNY is China, and trade balance is what? So if trade means what? Trade means import and export, right? So that balance, the difference between the import and export, that is referred in the trade balance here. And this is a very important data for gold. Why? Because China is one of the leading importers of gold. So if the trade balance comes highly positive, then this will be something to watch out for gold. This can give us a good movement in gold. Okay. So if the import numbers are higher or much higher than the export numbers, then this can definitely give us a good movement in gold. So on Tuesday, this data, trade balance data, will be highly important for gold because China is one of the leading importers of gold. Okay, so keep in mind. Next on Wednesday, we have again the CPI of China. It is year by year, so it's not that important. Month by month becomes more important. Anyhow, it's there. And New Zealand, we have the inflation expectations quarterly. Okay, and in USD we have 10-year bond auction. Okay, and not any other news in USD of high impact. On Thursday and Friday, these are the 2 days when we have the major news of USD. We have the inflation indexes. Okay, so on Thursday we have the CPI, which is the inflation index from consumers point of view, and on Friday we have PPI, which is the inflation index from producers point of view. So these two data will be very important because previously in the last FOMC, as we know, that Powell said that the future FOMC or the future funds rate will totally depend on the data, right? So they're looking out for data and they want to be confident about their decisions. They want to be sure that the inflation is actually under control, and based upon that they will be doing what they need to do. So these two data will be highly important for the upcoming week. And then on Friday we also have the prelims University of Michigan consumer sentiment. So that is also an important data, but majorly these two important data are PPI and CPI, that is on Thursday and Friday. So Thursday and Friday we are going to see some good price actions. Now let's come back to gold. But before that, now let's look at the technical aspect of dollar index and US 30-year yield. So dollar index, if we look at that, if I go to the daily chart, so in daily chart I drew these two lines here, these two trend lines here. They were confluencing very beautifully at this place here, and here we got a inverted hammer candle, and after that we have got a red candle here with the big body. So this gave us a confirmation, right? And if you have studied the technicals, then obviously you know that this is what? This is a bearish formation. So let me know what is the name of this formation in the comments below. Now if we look at the weekly chart, in weekly we can see the same thing, that dollar index first rose, but then it came down. It gave us a huge week upside. Okay, so this week is telling us that the dollar index is feeling pressure from this point here, right? So this is indicating us that the next week dollar index, now we are looking at things technically. Obviously don't know what will be the data, and we know that markets move on data, but since the data is not in our hands, we don't know what is the result of the data. We can just look at the technical aspects, right? So if we look at technically, then dollar index is indicating that now it is getting good rejection from this level here, and it wants to come down. Okay, so that is what it is indicating us. So this week what I can see is that the dollar index is little bit cooling off a bit. Okay, so that is what I am expecting. Okay, now if we look at US 10-year yield, then exact same candle as the dollar index in weekly time frame. So if you look at the weekly time frame, what we can see is that it's a copycat of the dollar index candle. US 10-year yield first shot up, but then again it came down, gave us a big wig upside, and this is how it closed. Now this was a resistance level which I drew, because previously market took resistance from this level, you can see, twice very easily. And this week also, even the market break this level, but then it came down and it gave a closing, so it could not sustain above this level here. So this is an indication that US 10-year yield is also facing pressure from this level here. Okay, so from this level, from this whole zone, the sellers are selling the treasury bonds, the securities, the investors are selling their bonds, and that is why the US 10-year yield is facing pressure. So technically, if we look at things from weekly point of view, then we can see that the US 10-year yield is giving us a bearish indication, and the DXY is also giving us a bearish indication. Okay, so what does that mean for gold? So if you look at gold in weekly, gold moved very nicely as per our analysis. The way I thought that it would move, exactly it moved actually like that. So gold, I gave the call in my free Telegram channel that 1970 and 1984, these two are very good selling levels. I said that on Monday itself when market moved up, and that's what happened. Gold took a very good selling from this level, so market made a high of 1972.5, and after that it couldn't sustain above 1970, and then it kept falling, okay, and it made the low on last Friday, which was 1924.7. so gold did exactly as discussed in the last weekly analysis video. Now what can I expect in this week? Okay, so this week, if you look at the weekly time frame, I said that this was a bearish formation, we got a bearish candle, but if we look at the bearish candle, we have a big week in the upside, in the downside direction. So this week is a very important thing. If this was a Marubozu candle, we could have said that the fall could actually continue in the downside direction, but since we see this big week here, this is telling us otherwise. If we go to the daily time frame, in daily time frame, what we can see is that I gave you two buying levels in my last weekly analysis video, and also I gave these levels in the Telegram channel. So the two buying levels here, first one was at 1935 because this was a very good support, and another one was these below trend line here. Okay, because this was acting as a very good support level. You can see multiple times price took support from this level, from this trend line. So obviously when market is respecting a trend line multiple times, so there is a high chance when market comes to this level again, market is going to short right up again, and that's what happened last Friday. Market definitely came down, but then again it went up. Okay, now this candle, what we can see here, it's kind of a hammer candle, but it's not exactly a hammer candle because the body is a little bit bigger, but still it's a pretty much bullish formation. As we can see here, wicks downside, and we got a big body upside. Also, if you look at the volume, then the volume is pretty much it's a pretty good volume. It's a decent volume. That means transactions did take place on last Friday. So what is exactly we're trying to understand here? What we are trying to understand here is that the dollar index is weak, the US 10-year yield is weak, and that brings us to gold. And now gold is indicating that yes, I have also one thing more. If I want to show you, let me just take you to the lower time frame, such as 4 hours, so that it becomes clear. Okay, so look at the retracement. Retracement is complete. It's 61.8% retracement is complete, and we got a week here. Previously also it did give us weeks here, but then again we got a bigger week here in the downside direction due to the volatility after the NFP news, and after that it shot right back in the upside direction. So obviously everything technical is indicating that gold is definitely bullish, and gold definitely wants to move upside direction in this week. So if it moves upside direction in this week, so what will be our buying levels? So if you already bought, then obviously you have done a good job, just keep holding that trade. If you haven't bought, then there's a high chance that gold comes back, gold retraces again to 1935 level, because this was a very important level, and from there gold takes off. So if that happens, you should definitely buy from 1935 level. Okay, so your buying level will be 1935. I hope it is clear. And if you want to sell, so by chance the inflation numbers, they come very high, and the dollar index, it gets highly positive, and the gold, it obviously it will be under pressure and it starts to fall. So in that case, what we will do? So in that case, obviously we'll be looking to sell, right? So in that case, gold has to come down, it has to break this trend line here, retest here, and then continue its journey in the downside direction if that happens, right? So in that case, you are going to wait. So this is a selling setup. In that case, you are going to wait for gold to break this level here, which was its previous low. You are going to wait for that, which is nearly 19, or its low was 1924.7 or 1925. So you are going to wait for a 4-hour candle closing. Listen to this very closely. 4-hour candle closing below 1925 level. So if you get a 4-hour candle closing here below 1925 level, obviously you can be looking for sell. But we have to wait for data for that. But looking at the technicals itself, we don't see a sell in gold, we see buy, because the dollar index is telling us that it has got good rejection, it should be selling this week. The US 10-year yield is telling us the same thing, good rejection, big week, it should be selling off this week. And if both comes down, then obviously gold is going to go up, right? This is a very basic thing. So that's it from my side. That's the analysis. If you like the video, definitely put a thumbs up, and if you're new, definitely subscribe and check out my Telegram channel. So see you in my next one. Thanks a lot for listening. Bye bye.